NVIDIA shares are up almost 200% for the year. Are they set up for a healthy correction? Which prices should you be watching right now for both the buyers and the sellers? I'm going to get into the charts and tell you all of this in less than 5 minutes. Let's get into it. What you're looking at is a chart of NVIDIA on the daily basis. So this is their daily chart, and you can see the move that NVIDIA has made to give us that 186% year-to-date returns. It's off of its highs, but a lot of traders are asking the question, is it ready for a healthy correction? Real quickly, I'm going to go into what a healthy correction is. Normally, when a stock has extended itself, or is in the midst of a buying fury or feeding frenzy, if you will, in the stock market, you will see it expand itself, become overbought. A lot of people have been talking about NVIDIA being overbought, and that sets you up for what we refer to as a healthy correction. Healthy correction can be anywhere from 5 to 10%, sometimes even down to 15% in the cases of stocks that have really overextended yourself, as NVIDIA has. But what does it do? It kind of refreshes the system. It gets some of the buyers out of the stock and allows new people to come in. It exchanges hands. Nobody wants to follow a rule that says buy high and sell low. So there are a lot of people that are sitting on the sideline waiting for an opportunity to buy NVIDIA, as this is all they've heard about when it comes to AI over the last 6 months. So where do you start to look for a healthy correction, and where would that healthy correction take you? The chart is giving us almost everything we need to know. First of all, I use a 20-day moving average. This is what I refer to as a trader's trend line. It's this orange line right here. That is one of the common lines that traders will watch. It's not short enough that you get too much volatility around it. It's long enough that you can smooth out the daily price action to a point where you can make some trading decisions. Right now, we're just above the 400 level with that 20-day moving average. And notice that the last 3 days, the stock has bounced off of that trend line. There's also another important number that is right here around NVIDIA trading below or sitting below the current prices, and that is simply the number 400, the $400 price tag. Every trader, every investor has something built into their trading mind, a little bit of psychology of trading, that we like round numbers. And for that reason, stocks get attracted to round numbers. And when we break below round numbers, there is usually some selling that goes with that. It's as simple as somebody saying, if it goes below $400, then I want to sell it. And with the stock that is up again, 186%, there are people sitting in the stock right now looking to take profits. And that again would lead to a healthy correction. So we've got the 400 level in play. We've got the 20-day moving average in play. Nothing else right now, except for we're coming off of these overbought levels. Now, you hear people talk about RSIs, relative strength index. It measures how overbought or oversold a company is. Typically, when it's overbought, it's hard to extend the rally higher because buying power has expended itself. Let me show you something else, though, that I want you to look at. And this is just a different way to consider the overbought and oversold. What you're looking at is a 50-day moving average premium. The 50-day moving average is the other trend line that I watch. When people talk about the trend being your friend, this is the one. We'll go back to that chart real quickly of NVIDIA, and I'll show you that 50-day moving average right here. When you see that rising like that, this is the sign of a healthy rally. But when you get extended or pulled too far away from that 50-day moving average, think of it like a rubber band. The stock goes too high, and all of a sudden, it's stretching that rubber band out and can't go any higher. It's just natural for stocks to follow these trend lines. So we get what we refer to as a regression to the mean, a healthy correction. Right now, we're seeing about a 40% premium, right around 35% premium, where the stock is trading above that 50-day moving average. Historically, this is high for NVIDIA. And you can notice some of the tops that you see that right here, where we're at about 35%. You see a top in the stock. It can be that simple. Again, we've got fairly we'll call them markets that trade in some sort of efficiency. And whenever you get too far away from a trend, it just says that the market, to remain efficient, has to pull back. If you want to see it on a shorter term basis, let's look at that as well. Here is the last year for that 50-day moving average and that premium. Now, NVIDIA has been going through the roof. So every time we've gotten up around that 30% level, stock has just seen a little minor correction, 5 to 10%, healthy. But nonetheless, that following that stretching of the price away from the 50-day has been very effective in giving you some short-term tops in the stock. Last thing I want to show you is the open interest configuration. Then we'll go back to the chart and I'll give you your price levels for the day. This is simply where the options market has placed its bets, if you will, on NVIDIA. So in other words, where options traders have been focusing their attention in terms of puts and calls. The calls are green, puts are red. Notice right around here, from that 390 level to the 400 level, there's a lot of congestion, and the calls outweigh the puts at the 400 level, which means historically you'll see some resistance there, a little bit of attraction. We call it pinning the strike. And if we break below, you're going to run right down to that 380 to 390 level, which is where the calls start to outweigh, or I'm sorry, the puts start to outweigh the calls. It can be as simple as just following where the options market has put their investments or their trades. So let's use all that information, go back to the chart very quickly and put together some levels for you to watch. I've already mentioned 400. From my perspective, if we break below 400, you're going to see not only NVIDIA, but some of the other AI names start to pull back. There has been weakness in the sector. This will also cause the NASDAQ 100 to start pulling back, and not coincidentally, the QQQ, or the NASDAQ 100, is trading right at its 20-day moving average. So the same effect of breaking that trader's trend line. The 400 will give you $380 pretty quickly on NVIDIA. That is going to be another semi-round number, but it's also the spot where we saw the stock gap up after that earnings. Very important level for the market in terms of that psychology. It won't want to give back levels below that. At 380, I start to become a buyer of the stock if I've been looking for an opportunity. If I'm patient, I just put a little bit of my money into NVIDIA at that time, and I wait to see if that's going to hold, because if not, we're going to see a 360 to 340 print on NVIDIA. And at that point, barring any type of catastrophic market pullback, I would be adding to my NVIDIA position. So selling on a short-term basis at 400 to take some profits, and then reloading back down around that 380 and then down to the 340 to 350 level. That's it. Those are your levels on NVIDIA. Long-term buyers are going to be buying this dip. So you watch that 50-day very closely. A break below that would tell us that something more is going wrong in not only the market, but with NVIDIA stock. And you're going to get a better opportunity at that point down around the 280 level. That's a far cry from here. I'll take my opportunities. The healthy correction would be great for NVIDIA to charge it up as we head into earnings season. That's it. My name's Chris Johnson. I'm with Money Morning. Make sure you follow and subscribe for more information, more trade opportunities like that. I hope you have a great day. I wish you the best trading success.